Aloha, YouTube investors. How is everybody doing today? My name is David Yansen. Welcome to my channel. Today is March 31st. It is Wednesday, 2021, and we are going to be looking at the winners and losers for the month of March from two of my portfolios, M1 Finance and Robinhood. So it won't be a very long video, so please stay tuned and please subscribe to the channel if you haven't already. I do thank everybody who has already subscribed. Thank you very much for subscribing to my channel, for following my channel, for sharing my channel with your family and friends, and also for liking my videos. There is a thumbs up button there for you to hit to like the video. That really does help support the channel as well. So does commenting on the video. So tell me what you think of M1 Finance, tell me what you think of Robinhood, and likewise tell me what you think of the holdings that I have in these two portfolios that we're going to go over today. So, like I said, I hope everybody's doing great. I hope you're safe and healthy out there. So, right away, you can see here with my M1 Finance portfolio, it is my Roth IRA. I am now over $9,700 with this, and it's actually done really, really well for me through the month of March. The U.S. stock market was better than February as far as growth is concerned, and there's some speculation, some talk. The reason for that is because of the stimulus checks that went out and new rounds of unemployment. So people that never lost their jobs and never had to go on unemployment and just had to adjust their work habits, but they maintained employment through all of 2020 and through the whole COVID, everything that's been going on. They are getting $1,400, and so that's kind of just extra money for them, to spend on the economy, to help boost the economy. So there is speculation that a lot of them just put that into the stock market, and you saw the numbers do really, really well for the S&P, the NASDAQ, and the Dow. Now the NASDAQ did suffer a little bit through the month of March. There was a lot of sell-off with tech companies, and we'll look at that when we see my Robinhood portfolio, as I have more tech holdings in that one than I do in my Roth IRA here. But all-time total return, you can see almost 24.5%. This is all-time right now that we're looking at. My total gains a little over $1,000, and that includes earned dividends of $190 and some change, and that is all-time there. So if we go back for the month view, this is for the month of February. My total or the month of March, sorry. My total return is 5.79%. Typically, if the month ended on a Friday, then I would do this video on a Saturday or a Sunday, but the month ended midweek, so if I was to do this video tomorrow, everything's going to change because the stock market is open tomorrow. Not going to be open Friday for Good Friday, but it is open tomorrow. So total gains, good gains, 5.79% for the month of March. I earned over $19 in earned dividends. So my market gain without the earned dividends is over $484. With the earned dividends, it is over $504. So good month for the month of March. I was able to dollar cost average as well too into some of these holdings here that I have with my M1 Finance account. So let's click back on all time here, and you can see my individual slices here. My REITs, Real Estate Investment Trust, right now I have the most money put into them because I was adding to Equinix, the data center Real Estate Investment Trust. As they were trading on the low side, REITs kind of were trading low all through the month of March. Didn't start to pick up till this week and last week a little bit, at least the holdings that I have. So I was able to buy more into Equinix, but as you can see, all time, with these slices, no red whatsoever. So winners as far as all time, you can see all time tab is clicked there. And if we click on it, the individual slices, my REITs has returned 3.47%. Earned dividends all time is over $76, almost $77, just 1 penny off from $77. And as you can see, my market gain is down $25, but the earned dividends has put me $50 up, over $50 up, just because of the earned dividends. And that's, again, I've mentioned this in previous videos, going back to when I first started putting all my information on YouTube, tracking my investment journey on YouTube, that the nice thing about earned dividends is whether the stock market is up or down, if the company that you're investing in is a solid dividend-paying company, you get those earned dividends whether times are good or whether times are bad. So now if something happens like the whole thing crashes and we go into a severe Great Depression, like what happened in the 30s, then a lot of people are going to suspend their dividends. But if they're a solid company, they'll pick it right back up, like Disney's planning to do. So anyway, all time you can see here again, my only loser is Equinix. Like I mentioned to you, I've been dollar cost averaging into them. Now my average share price is down to $684, where before it was about 700 and it was over 700, either 704 or 708 was my average share price, and now I am up to almost 2 shares, 1.94 shares. Mainly been doing fractional shares because I did have some buying opportunities, little buying opportunities with my Fidelity account. Unfortunately, Fidelity doesn't separate things in the month view, the quarterly view, the year view, the week view. They only do all time and by the day. So I'll do a winners and losers of my Fidelity account, but it won't be for the month. So anyway, but now the stock price is $6.79, so I might add some more this week to this company. They are a very solid data center company. The only one that was down, all the others, Realty Income, Digital Realty Trust, American Tower Corp, and the ETF, Vanguard's real estate ETF, all up in the green for all time. So if we go back for the month of March, you can see Equinix actually did very well for me for the month of March, as did all my other holdings in this REIT slice here. So let's move over to my blue chip slice. This is my Dividend Kings, Dividend Aristocrats. These are your really solid companies. Over the last month of March, you can see almost 8% total return. Earned dividends for the month was over $5. Not a whole lot. I don't have these huge portfolios like some other people that you might have seen, but I'm growing because I'm still new. Still not at 2 years yet, but almost to 2 years. I believe it will be the end of May. Mid-May, end of May, somewhere around there, that I will hit my 2-year mark as far as investing is concerned. So personally, I feel like I'm doing okay. I'm doing pretty good, and some people have left comments telling me that they thought that I'm doing a good job and to keep going as well too. I do appreciate those comments of encouragement. So, and comments of constructive criticism is encouraged as well too. So, but looking at these individual holdings, I did add to Kimberly-Clark as well this month. Actually, today is when the transaction went through. So for the month of March, you can see everything is green here, so no losers as far as these holdings are concerned. And if we go to all time with my blue chip slice, all of them are in the green as well. Kimberly-Clark was the only one that had really been in the red for most of last year, towards the end of last year and the beginning of this year, but I was dollar cost averaging down into this company, so average share price is at $139.92, and the stock is now trading at 313. I don't know why I keep saying threes. 139.05. So, and I have just over 4.5 shares of Kimberly-Clark, the defensive consumer products company. So let's then go to my tech slice. This will be the last one for my Roth IRA. Then we'll look at my Robinhood winners and losers for the month of March. As far as all time is concerned, you can see here, this is huge, 52%, over 52.5% total return, 52.67%. My earned dividends, tech companies typically don't pay huge dividends. Neither Apple or Microsoft pay a very good dividend, although it has tons of room to grow, and their balance sheets are so almost perfect. I mean, they're so, like I said, close to perfect that you can only imagine that they'll quickly get to dividend aristocrat status and continue to grow that dividend at good percentages. So only $8.46 in earned dividends for all time with this tech slice, but my total return is just huge. The stock split with Apple helped a little bit. I did add a few more shares after that stock split there. If we look at the month of March, for my tech slice here, you can see total return. Like I said, tech was really laggard through the month of March here. The NASDAQ really kind of was down for some reason. My personal opinion is that people were buying into some of these high-flying tech stocks and then selling out of it just to take profits. Just my personal opinion. And I know I say take profits in almost every video, but that's kind of the only reason that I can come with as to why the stock certain stocks will fluctuate the way they do, especially a company like Apple and Microsoft. Microsoft has actually been doing better than Apple, as you can see here with my total returns and my in each company here. So only 52 cents for the month was brought in, and I believe it was, let me look at my activity here. Who paid a dividend in the month of March? I think it was Microsoft. Oh, it's going to stop right there. It's not going to, I've got to go to the previous. Okay, so we won't go into that just for the sake of time. So, and then these three ETFs that I have here, Dow Jones Industrial Average ETF, which tracks the Dow Jones for the month of March, or all time, sorry. All time, you can see I'm up over 34%, and this is Vanguard's International High Dividend Yield. This is a nice income ETF for you, and also gives you international exposure. Up over 34%, and then my S&P 500 tracker with iShares is up 26, almost 27%. So really good returns with them as well too. So my main strategy is buying the dips, buying these more solid companies for my Roth IRA. Hopefully my Roth IRA isn't just recession proof, which it's done relatively well through this year, through this pandemic and the recession that we were in 2020. But hopefully it's future proof as well too. So that's kind of how I tried to play it out. So here is my Robinhood portfolio. Again, over $4,000 for the first time since I think the end of January, beginning of February. And I think it wasn't even $4,035. It was probably closer to $4,001. And as you can see, my all-time total return with this portfolio is over 26%. So one time I was up closer to, I think I was actually in the 30s at one time with this one. But like I mentioned, the NASDAQ and a lot of tech companies were trailing throughout the month of March. And if we look over here at my holdings, let's just click that instead of last price. Let's do total return. My total return for all these companies is almost everybody's in the green with the exception of Salesforce as of right now. And that's just because Salesforce is kind of funny. Like they're looking to acquire Slack to add to their portfolio, but they're very aggressive. I have a video that I've done on Salesforce, ticker symbol CRM here. I really like the company. I really like their CEO. But for some reason, it'll jump all the way up to $230 or so. So if we go 1 month out here, you see it's trading at 217. All the way back here, 219. Let's go 3 months out because I know it was in the 230s at one point. So February 16th, yeah, 248. And then it just kind of fluctuated down. And then they did their earnings report, which they did very well in the quarter. And it just stays around the low 200s here. So with me, I did add to them this week, I believe it was, or last week. I put $50 in. Again, you can do fractional shares with Robinhood now. So I'm almost to 2.5 shares with them. But I'm kind of skeptical as to when they might break out. I'm thinking they will break out once they finish the acquisition of Slack, and then maybe they'll move more aggressively towards the 300 mark like they did last summer. They were trading at the high, I think was 270, somewhere around there. So as far as total returns, all the companies are doing really well for me. To see how the portfolio has performed for this last month, 0.22% is my total returns for the month of March. And like I said, because it's a tech-heavy portfolio, this is my growth portfolio, mainly looking for capital gains here. My returns aren't going to be that big. Now, I did sell out of Facebook. I probably should have sold out of Facebook tomorrow instead of today because they were included in the month of March. But I did sell out of Facebook, like I mentioned in other videos. It didn't get to the $300 mark where I was hoping. I believe I actually sold at $295 or $295 and some change, possibly $296. I don't remember off the top of my head though. So, and I couldn't put a limit order for it because I didn't own one full share. I only owned 0.8 shares. So I was really close to owning one share, but that I just didn't add to it because the price kind of took off and I tried to buy the dips. So, which I would encourage you to do the same thing, is to buy the dips. So the only other companies in my watch list here that I'm really seriously considering is Airbnb, and this is ChargePoint right here, ticker symbol CHPT. Those are the only ones in my watch list that I'm seriously considering. buying into, and since I sold out of Facebook, you can see I have a little over $200 sitting there to make a purchase. So in the app version of Robinhood here, it would allow me to break down each of these without me having to click on each individual one to show you the month return. But just to give you an idea, if I click on Uber individually, you can see over the past month it returned 0.5% for me. And for the sake of time, I don't want to go through all of these, but I did take profits from Uber. I sold 3 shares at one point, and I used that money to put more into Pfizer. So that's kind of my strategy with this growth portfolio, is take profits from some of these more high-flying stocks here and put them into more dividend-paying companies. So one last one that I will show you here, NEO, is the popular EV. EV had a really tough month as well too, and NEO is expected to struggle as well as Tesla and some of the other almost all the car makers, just because of the chip shortage. So there's a chip shortage not just in America but around the world. So you can see 3 months ago it was trading at $62. You go all the way here to March 25th, you can see now it's down to $37. And for the month of March, you can see I'm a negative 20%. But for the year, actually, that's just what that's not me. That's what the stock is doing over the last year. Over 1,300% for the year. Me personally, my total return is over 263%. And last summer, it actually jumped up to where I was over 1,000%. But I did end up buying one more share, which brought my average cost up to $10.71. Where originally my 5 shares I had bought was at $4.45. I wish I had done more at that time, but like I've mentioned to you guys in all my videos, I don't have a lot of money, so I'm just kind of doing the best that I can right now. So, but anyway, stay tuned for my dividend tracker video, and I'll also do one on Fidelity as well too. I have this website that I use here that tracks your dividends for free, trackyourdividends.com. It is the best free dividend tracker in my opinion, because it gives you a lot of features that you can use for free with it. So I'll do that video in just a little bit as well too. So hope everybody stays safe and healthy. Mahalo and aloha.